In this video, I'm gonna show you how to make some serious cash by scalping the 1 minute time frame. I'm here to prove that all you need is a solid grasp of liquidity concepts, PD arrays including order blocks and fair value gaps, displacement, and candlestick formations. Trust me, with just a few hours a day, you can literally make a living out of this. What I'm gonna do is I'll take a random day and demonstrate how I scalp the 1 minute time frame like a pro. No need for any fancy stuff, just pure SMC or ICT. I'll show you exactly how my thought process works, both before and after taking a trade. You'll get an insider's look into my scalping mindset. This is Mulhan Trading, and let's dive right into the video. Before getting into the video, if you want to take your trading to the next level, then you need to backtest your strategy and make sure it's profitable over time, as well as testing and backtesting other strategies to see which one fits you the best. I personally use Trader Edge, which is one of the most efficient tools available in the market. You can backtest your strategy 3 times faster than traditional spreadsheets, and it's gonna show you all the statistics of the strategy immediately. Make sure you use the link in the description to get access to the platform. Now, when it comes to scalping the 1 minute time frame, we need to be as fast as possible, and we're gonna focus on liquidity sweeps. So if you have no knowledge about liquidity and liquidity sweeps and the liquidity concepts, then make sure you watch my other videos, as I went on details over liquidity sweeps, liquidity in general, inducements, all of those stuff. So basically, when it comes to our trading plan, we have 3 cases here. And I'm not trying to have a pattern trading for you guys. This is pure SMC. I just tried to put it into 3 cases. Okay, we're not gonna trade change of character. We're not gonna trade breaker structure, those stuff. We're gonna focus only on liquidity sweeps. So focusing on one thing will have your mind clear and focused. So liquidity sweeps, we have the first case is this one, a sweep here of a level of liquidity. Price doesn't close below this level of liquidity with a body, it closes with a wick. When this candle closes on the 1 minute, I would enter immediately from this level here, the closure of the candle. As soon as this candle closes, I would enter from here. The other case is, and this is by the way my favorite case, the other case is this one. When a candle closes with a body below this level of a sweep here or liquidity, what I'm gonna do is I'm gonna wait for another candle for a confirmation. So let's say this candle closes here, I would wait for another bullish candle to close above this level here, and whenever it closes above, then I would enter from the closure of the next candle here. This is the second scenario. Now the third scenario, it doesn't happen always, and there's sometimes that I don't take this entry, but just in case you have this type where you have this candle that closes with a body, but then the next candle, it's not that small candle that closes slightly above the previous candle. No, it's a very big momentum candle, this one. So if you enter from here, your stop loss would be so big, right? And for scalping, we want to make sure our stop loss is not that big, and also there is room for price to go up. So if you're entering from here and your level of liquidity is only here and your stop loss is here, you see the difference? This is your take profit from here to here, but this is all your stop loss. See the difference, that the stop loss is bigger than the take profit? So in this case, what we can do is we can wait for price to create a fair value gap here. So from this candle, then the momentum candle, we're gonna wait for another candle to form here, and we're gonna mark our fair value gap here. We can enter from the 50% of the fair value gap here. So we're gonna enter from here, stop loss all the way below here, and then targeting the other liquidity. So what we're gonna do is literally those 3 cases, okay? Just to prove you that even the simplest form of trading SMC can work. But you can also implement other stuff that we learned together, right? You can involve the higher time frame bias or the higher time frame PD array, midnight open, 8:30 open. You can also involve the Asian range and then use some breaker blocks or balance price range. All those other stuff can give you a higher win rate, but the main purpose of this video is to show you that even the simplest form of trading SMC or ICT can work and can be profitable for you. So first, we're going to start by setting some rules. So basically, we're going to only trade on kill zones, because that's going to help our psychology because it's not going to be that much waiting, and there's going to be the most volume on those times. So we really want to scalp take expansion movements on the lower time frame. That's we can find on the kill zone. So London kill zone from 2 to 5, of course, Eastern time, New York time. But this is London kill zone. And then 7 to 10, which is New York kill zones. And that's also New York time. So we're gonna trade both those kill zones, and we're gonna find the setup on only from 2 to 5, 7 to 10. So this is something that we need to follow. Also, imagine that I have a position of 4R, for example. What I'm gonna do is I'm gonna move my stop loss when price gets to 2R, and I'm gonna take 1R this. So basically what I'm gonna do is I'm gonna move my stop loss when my position reaches 50% of the profit, and I'm gonna pull out 50% of that profit. So those are the rules that I'm gonna follow. Now let's back this. So I'm having GBP USD. This is my favorite pair. Now if I go and take a random day here, for example, let me just go, I don't know. Let's say here, for example. Okay. This is the 1 minute time frame. No indicators, nothing, just pure price action together. Now let me show the price here. I mean, this is Thursday. The next day, now it's Asian session here. So what we're gonna do is take the next day. Basically, we have Friday here, and then let me mark the London kill zone here. So this is my London kill zone. And switching to the 1 minute now, before London kill zone starts, let's mark some. Okay, so this is before London kill zone starts. So the first thing that I can see is, okay, we have those equal highs here. I can mark them, and I also have this liquidity below a fair value gap. That's my full trading plan, right? This is the thing that we trade. So I can also mark this. Now I do have some liquidity here. For now, I'll leave this. I'll leave this because price is approaching. But this one was taken. Now we could have, we could have taken a trade here with a stop loss above this high, and then targeting, I would say, maybe this low here with a fair value gap. This is also my trading plan here. So this is something that we could have taken, but this is before the nickel zone. So we need to stick with our rules. This is something that we can take. Now let price play. Okay, price is kind of reaching this point, but it doesn't. Now it's kind of reaching this fair value gap here. Price doesn't reach that fair value gap and creates equal lows here. And there is a big displacement here. Price goes up. So yeah, so we can basically have this as liquidity here. This is a level of liquidity, right? And price goes above. Okay, it doesn't close below. So what we can do from here is enter short after the closure of this candle. Now what I can target is those equal lows here, right? And inside this fair value gap. But I will just target those equal lows. So this level of liquidity here, this is my take profit. And I would say stop loss is slightly above this swing high, just to have some. I mean, I could have go this way, but I'll, because the candle is big enough, so I'll target this. This is 6.8. There's also something that you can target this low here, but just because I see those equal lows, then I'll target those. And I also have the ability to move my stop loss, so I should be good. So my stop loss now, this is 6.8. 3R is gonna be, say, maybe somewhere in here. Maybe somewhere in here. So basically when price reaches this point, I'll move my stop loss to break even. Now let's target this low here. Okay, that's kind of sharp. That's kind of sharp. Like zero drawdown. This is 6.89. Okay, now there's something also. There is this fair value gap. that was partially filled, and price can comes here, and I can also enter from here. If there is a sweep of this low inside this fair value gap, I can enter. So let's see how it goes. Okay, it's so weird that price did not go inside. Okay, now it does. Now it's okay. It takes this one and goes barely into the fair value gap. Okay, this is another trade here. Possible trade. We have this liquidity level here. We have this liquidity level here, even though there is an expansion here, but we can still trade on the opposite side just to make sure that this is a valid, like you see this retracement to this fair value gap and taking this liquidity. Now, most likely price will go above more and more, but this is kind of a valid entry here. So what I can do is enter from here. Let me just drag this to the left. Okay, I can enter from here. For this, I'll just make sure to have some room for price to breathe. Okay, so I'll just put it slightly above. And then what I can target is, I can target this low, right? Because it's already swept. There is no point of price going all the way down there. What I can do is actually target this fair value gap here. And I can target the 50% of this fair value gap, like somewhere in here. I think this would be nice. It's already 7 hour. So I can also target this fair value gap all the way down here and have a bigger stop loss. I feel okay. I feel this is nice because I have some room for price to breathe and I have a nice take profit. Okay, that's nice. So now this is 7 hour. Price reach 4. So yeah, I should be on break even. So price comes again to my entry, then I would be out of the trade. Okay, and it does go to the take profit. So this is another trade just based on this trading plan here. So now if I zoom in more, this is the thing that we marked together. So maybe I can extend it to the right more. And I'm gonna try to only use, oh, you see, so this was inside this fair value gap that we marked before, and I did not see this before. So this is something good to know. Now going more, I do have this ultimate liquidity here all the way up. This is the furthest one, so it's good to mark this one. And then there is this one, but this one, I think if price comes here, most likely it will come all the way here. So maybe there is this one here. I'd mark this one, this liquidity. And if price doesn't respect this one, then I'll go to the next one. So now let me play. Okay, price goes up, sweeps this, but then the first one is with the body. This next candle, a lot of people would enter from here, stop loss here, and then taking profit maybe here at this candle. But this is an inside candle. You see how there's, or from here, this candle is a big momentum candle, and this one is only inside candle, a very weak candle compared to this one. So I don't think this is a good opportunity unless there is a candle that breaks below this candle. So a strong candle that closes below this candle, then I would enter from here. This candle is a very weak candle. So still, this candle doesn't close below this candle, so I would not enter from this one. Maybe I'll wait for this level of liquidity here. So let's see. So now price sweeps this level with a big wick, so I would enter immediately when this candle closes with a stop loss above this high here. And what I can target is, I would say this is 3-1, not bad, 3-1. Okay, price started to go down, but then okay, it hits stop loss. That's okay. Now there is another level of liquidity here. Will price respect that level of liquidity? It doesn't. Very big momentum candle above this level. So I would remove this. I'll remove this and I'll go look for another liquidity. So okay, this was my last liquidity level here that I see. So I'll still keep it. Okay, I'll still keep it. But this is a very big displacement above this level, so I don't think I'll enter unless I see, because this can be retracement here and then coming down. This would be a sweep on the 5 minutes or the 15 minutes, right? So let's see, if price keeps going up, then I'll look for a retracement to here to go long, but if price comes down, then I'll go short. So yeah, whereas so price is getting weaker, so I can't enter off those candles, but it looks like price is getting weaker. Now this is a very strong candle that broke all of the previous candles. It looks like it breaks structure coming down into the range. This can be a sweep in the 5 minutes, right? Now this, if I enter here, my stop loss would be all the way here, which is very high, or maybe here, which is still high. So what I can do is, if given a fair value gap here or here, I would enter from the 50% as the third case. And yeah, so we have this fair value gap here. What I'm gonna do is, I think I'm gonna enter from, so if you grab your gam box here, from this to here, this is my 50% fair value gap. I'm gonna enter from here, stop loss above this order block here, and then what I'm gonna target, maybe, I think this unfilled fair value gap here, because you see how price came into this fair value gap, but there's one here, so this can be an inducement into fair value gap here. So maybe this is something that we can trade. So this is 4R, not bad, 4R. So price, okay, I think price, yeah, price triggers the entry, and then start to come down. Okay, it goes to the take profit. It goes to the take profit immediately. Will it go here? I'm not sure. Okay, yeah, it did go here. So we could have, this is 4R, but we could have got 5.7R or maybe more, but that's okay. Now from here we can see that, okay, there is this fresh fair value gap was filled, then price comes down, there is another fair value gap, and it has the same thing. That's why you always want to trade. Point of interest, if it doesn't have a liquidity above or below, it's not that strong. So your point of interest doesn't mean that much if there is no liquidity above or below. This example here, we have this point of interest fair value gap and we have this liquidity below. So what's gonna happen is maybe price is gonna come, take this liquidity into this fair value gap and come down. So I would really anticipate price to come into this fair value gap, and if I see a reaction from here, I think I would go long, because this is an area that I was marking before. This is an area that I was marking when the kill zone starts, so this is something that I can look for. Okay, I think, okay, so yeah, that's what we see. We see a big reaction from this zone here. Okay, what I can do is enter from the closure of this candle and then stop loss below this point, but I really need to secure the full or the whole fair value gap here. And then even if I target this would be, okay, this would be 3 to 1, not bad. But I think waiting for another candle, okay, or I would enter from here, targeting this area here, because I think this is the liquidity into fair value gap. So we can anticipate, or what we're seeing here is turtle soup here, entering here, price comes up, turtle soup here, entering from here, and we're targeting, or we are actually trading both sides of the market. So now let's see what happened. Okay, oh my god. Okay, this was kind of sharp here, so a really sharp movement to the downside. Unexpected. I did not expect this. I thought price will respect this, but it's okay. There was kind of equal lows here, and price retrace here, but then keeps going down. So I don't think there is any opportunity. Maybe this order block here, price is gonna react from this order block here before the fair value gap. Okay, so there is maybe There might be a reaction. I'm gonna remove this and also this. Okay, if price breaks below this point, then there might be an entry. But still, this is a very big. You can still enter from this, but it's not the confirmed one, because for the confirmed one, I'll be looking for a small candle here that candle closes below it, right? But this doesn't happen. Okay, so if we entered and the stop loss was above the swing high, we would be out, but I did not enter. You know what I'll be looking for? Because there is still a chance to enter from here. And then there is this unfilled fair value gap. But you know what I'll be looking for is this area here. And maybe, I don't know, this is this level of liquidity here also. But this one, price goes up here. This is also another liquidity here, liquidity sweep. So this can be an entry, you know? I would enter here. I would enter here, stop loss slightly above this swing high and targeting this area here. This is 4 to 1. I'll just go here just to secure this order block. Okay, I think I'll go all the way here. This is 2. No, I'll stick here. Okay, price still did not hit stop loss. Okay, it hit stop loss, then start to go down. Okay, so that's why sometimes you need to think twice, because I was thinking about putting my stop loss all the way up here just to cover this order block, because there's a potential of price filling this small fair value gap and order block. But basically, price hit my stop loss here and then start to go down. But it's all good. You know, we learn together. This is something that you need to think about twice. Now price goes down. Now this is a little bit of liquidity. Let me think now. This one was taken. Okay, I'll be taking a trade here. So this is a losing trade. Let me just take it out of the way. Now there is this entry here. If I enter from here after this liquidity sweep, stop loss just below this point, and then I'll be targeting this high here. Okay, this is 12 to 1. Okay, I think it's kind of huge, so I'll put my stop loss below here just to cover, because I don't want to make the same mistake here just with a tight stop loss, because it doesn't happen always. You can be lucky sometimes, but it's not always the case. So I think I would go with 5.5 here just to have some room for price to breathe. Now let's see. Okay, price did it hit stop loss? No. Now price gives this candle here, so this is good to see. Okay, now we see kind of a breakout. So I think after here or somewhere in here, I'll be moving my stop loss to break even. Okay, so not now. Okay, so was it on break even? So this is 5.4, so 2.5. 2.5, yeah. So this one is a break even trade. Okay, break even trade. And it still goes to the take profit. So we got until 2.5 or 2.8 actually. At this point, we moved our stop loss to break even, and then we got stopped out at the entry, but then price goes to the take profit. So, but now what I see is this. If I take this here, this is what I see. Another time where price here, okay, if you can see price did not reach the order block here, this order block. You see, slightly below this order block, price reach. Now price reached the order block and fell almost 50% of this order block. And price closed above this level of liquidity, okay? But with a wick. There is a wick here, a small body, but then a wick. So what I'm gonna do is, I think I'm gonna wait for a breakout to the downside with some candles. Now there's this candle, but this one is inside this big candle, right? This is a weak candle inside this strong candle. So this one, I don't think it's a nice opportunity or it's a nice trade if I enter from here, because price can go up from here. So I would wait for price to close below this candle here. And this is, I think, yeah, I think this is a confirmation here. You can see that, okay, we have a sweep and price coming back to the range. There's no displacement above this point. What I'm gonna do is enter from here, the closure of this candle. I'll have my stop loss exactly above this point, and I'm gonna target either this fair value gap, but this is 1R, so I think I'm gonna go with this. Okay, so 3.3R in this candle here, or this low here. Okay, big displacement to the downside, that's nice. Okay, wow, so 1, 2, 3, 4, 5, 6 bearish candles. Price doesn't come to our entry, so this is nice. If we have entered from this, we would not be stopped out, and it would be 20R, but this is kind of risky. It doesn't happen always, right? So we're good with 3.3R. It's okay. So we had multiple trades here. Now it's 403. So we have one more hour on lending kill zone. If I zoom out just to see the big picture here, I can clearly see that, okay, there is this level of liquidity here. Very clear one, right? I do have this one, this level of liquidity, but I also have this fair value gap here with liquidity above, right? So this clear fair value gap with liquidity above, this can be a very nice trade. There's also another liquidity zone here, so I can also mark this. This level of liquidity is too close to the current price. Okay, so I want to see the reaction from this level. Now if I play, okay, so very clear break. So I would not enter from this trade unless, so I would not enter a trade based on this unless price give me a candle here. Okay, and then a candle that broke this candle, or price engulf this whole candle into here and close above this one. So those are the scenarios that I'm gonna enter. This is how I really think. So now playing this, okay. So price did not close above this line. If there is another candle that closed above this level here, I would enter, or maybe wait for a fair value gap, because there is a lot of fair value gaps here that I can target, right? So it's gonna be a nice entry if price closes above this candle here, this bullish candle, and then I would enter targeting maybe this extreme fair value gap here with this breaker block. Okay, so price continue to the downside. Okay, price into that. Okay, that's nice. Price coming into this fair value gap with liquidity or inducement above. Now I think it's a nice entry. Now this is a nice entry. So I'm gonna enter from here, long position from here. I'll cover the fair value gap. So I would go below the fair value gap or at the, okay, somewhere in here. Now what I can target is this clear breaker block here. Fair value gap and breaker block. I think this is, okay, 5 to 1. You know, I would go, because this wick here is big enough. So I would only cover the low of the candle. This is 5.8. And let's see what happened. Price, okay, small drawdown here. Price breakout to the upside. And then goes up. So now we are break even, but price doesn't come to our entry. And okay, is it gonna have? So there are multiple fair value gaps here. Price can react from any of those, okay, any of those. But when you have multiple fair value gaps, you really want to look for overlapping PD arrays. So breaker block here, fair value gap inside that breaker block, even if there's a fair value gap here, two fair value gap, and then there are two fair value gap here. Price is mostly gonna react from this fair value gap with a breaker block. So PD array, they're OP. Okay, so this is something that's why I'm kind of confident that price will react either from here or here. But for this trade, I think 5.8 is good, so I'm gonna target this fair value gap with a breaker block. Okay, I think price reacted from here, from this fair value gap. But no problem, we have our stop loss at break even. and price goes up. Okay, I think it hit take profit. Yeah, so price hit take profit here. This is 5.8. This is a very nice trade. Very nice trade. You see how you caught the low here? So it's almost 5 a.m. here, which is London kill zone. Now we're gonna move to New York session. We already had some good trades on London here, London kill zone. A lot of trades, and we're gonna move to New York now. Okay, so this is 7 a.m. here. So this is the start of New York kill zone. Yeah, I would skip until I would say here. Okay. So what I see here is okay, those are some clear equal highs here. Very clear equal highs. So this is a level of liquidity that I can target. Very clear level of liquidity. What do you see too? Okay, so price goes up. So price going up now. But let me extend this because this was a level that I was looking for. Let's look for other levels here. You see how there's almost no fair value gaps here? There's only this level, the fair value gap from the London kill zone. So I'll just extend it here. Now, what I see here is those equal highs. If price sweeps above those equal highs and then show a reaction or a candlestick formation, then I might enter. Okay. So price comes down, almost taking this. Okay. It doesn't take this low. Now we have those equal lows here, relative equal lows. It's also another level of liquidity. Let me just remove this. Now this, if you enter here, you see how there is a big wick? If you enter here with a stop loss here, first of all, that's a huge stop when it comes to the take profit. This is take profit, so this is not a good RR. Now you can go here to those equal, but this is taken already. There is no clear level of liquidity. It's not really convincing to enter from here unless price comes and get close to here and then react from here. Then I would enter targeting those equal lows because this is the most obvious liquidity level here. So I would not enter this. I will skip. If price comes here, I might enter from here targeting those equal lows. Okay, so price maybe it's gonna go up here. No, so it goes down with the displacement, takes those equal lows. Okay, so now this is where I can enter. This is where I can enter. So I have a clear liquidity sweep of those relative equal lows here. I think a good opportunity is to enter from here. Stop loss below this level here. But then, if I target this is the only 2 to 1. Let me see what other liquidity levels we have. We can target this. We have those. Okay, you know, I'm going to take a kind of a risky trade here because I'm really positive about this fair value gap. Very big fair value gap. It needs to be filled. It needs to be filled. So maybe I'm going to target this beginning of the fair value gap right here. So it's going to be a nice entry, but for sure, even if this is not my 50% of the position, I would move my stop loss to break even without taking profits here. Okay, I'll just move my stop loss. So let's see the reaction of this trade. Hopefully first it goes until this level with a displacement. So price goes up. Okay. So there's kind of okay, so price closes above this level, which is nice. There is a fair value gap here. It might be filled, so there might be a retracement to the downside just to fill that fair value gap. And we have some liquidity here. So maybe price still gonna come to this fair value gap. Okay, price fill this fair value gap. Retracement now. This is what I want to see. Okay, price still goes up. Okay, and take profit hit. Take profit hit. That's nice. That's nice. Now, honestly, I did kind of skip a lot here, but if it was me, I would go short on this because I see a liquidity sweep inside the fair value gap with a wick. So I would enter here and I would at least target this order block here. This is 4 to 1. This is gonna be a nice trade, I think. Okay, so it hit stop loss, but I was just being honest with myself because when it comes to backtesting, you need to be honest with yourself. This trade here, I would take it every time, even though this time it didn't work. But you see how a lot of time it did work. For example, this time it did work here, or not this one. Actually, there was another one on Linden Killzone, but it did work a lot of time. So this is a loss. It's okay. Now I don't see any liquidity level except this one. There is this one. Liquidity level here, and also there is this unfilled fair value gap. So I'll keep an eye on this fair value gap here. Now let's see price. So price goes up, takes this level of liquidity. It does close above this level slightly. So what I'm gonna do is, so even though price closed slightly above this level, but I'll still consider it. Why? Because there is a big wick here, and there is also a room for price to breathe. So if I have my entry here, there's a room for price to breathe here, then maybe come down. So this is gonna be a nice entry still, even though it closes above this level, but sometimes you can be flexible. That's how I do it. I'm not following a specific pattern. You're not a bot, right? You can see that okay, this is a very small closure, but you see how big the wick is. So what I'm gonna do is get a short position from here, have a stop loss slightly above this high here, and what I can target. So you have two targets here. The first one is this fair value gap here, but there is also this fair value gap here, which gives 4R, and there is also this order block here of fair value gap with order block. This is 7R, but I think I would stick with, I think this one 4.8. Okay, that's nice. So 4.8 and price. Okay, did it go to the, so this is 4.8 and this is 2.4. I think this is a break even trade. This is a break even trade, but let's see what happened. Okay, so price eventually goes to the, I think, okay, it doesn't go to the take profit, and this is a break even trade still. I think I needed to stick with this level here because this is kind of too low because there is a this mitigation block here. Okay, so I was stopped out here, then let's see what happened now. Okay, we have big movement to the upside. Was there a sweep here? I don't see anything to the left. Okay, so I don't see any liquidity sweep here, so I'd be skipping all of this. Now there might be a liquidity sweep in here, okay, on this level here. Okay, so price coming all the way. So if there is, I would still look for this level here, this unfilled fair value gap. So from here to here, this is unfilled fair value gap. I'll keep an eye on this. But this liquidity level is also valid. Okay, so did it take this liquidity? No. So this liquidity level was not taken. There is a retracement from this level. Price goes up. Maybe now those are relative equal lows and it's going to be taken. Okay, if price takes the liquidity here and this one, I would enter long, and price doesn't. So now this is another case. This is not related to our strategy today, but this is something that you can implement here, right? I'm only talking about liquidity sweep today, but you can implement everything that you learned. You will use all the skills that you get from me, from other people, all put it into this scalping plan, okay? So we can see here is we had this fair value gap here. What happened is price retraced from here into this fair value gap, came down, doesn't break this level here, and started to go up, created this failure swing here. What does that mean? That means that this is now an intermediate term high, and breaking above this high here, consider as a change of character. So if you're trading everything that you know, so now this is an intermediate term high, this is a break of or a change of character actually, and there is this fair value gap here. So if price comes into this fair value gap, I think there is a nice long opportunity here. So this is a really confirmed change of character. So now price into this fair value gap, and it goes all the way to the body of this order block here. Let's see. So there is a potential for price to react from here, but then there is also a potential for price to sweep this low and then react. So we are dealing with all possible scenarios, right? If we see a reaction from here, you can enter, but if you're only trading liquidity sweeps, then you can wait for this level to be swept. Now, this inside candle, inside here, a very weak candle, but then another bullish candle broke above this. So you can really enter from here this way. Stop loss just below this point here, and targeting, I would say, this high for, okay, that's the opposite actually. So go long here, stop loss here, and then take profit all the way at this level. This is 2.7. I don't think this is, the 2.7 is still good, but I would skip it for now. It's kind of risky because of those relative equal lows, but this is the good thing, right? So if you're entering this, it's going to be based on this change of character here and intermediate term high. But for now, I would skip this and I'll only wait for a liquidity sweep. Okay, so price goes all the way up there to our take profit. Does it hit the take profit? Yes, it does, right here. So this is a very nice liquidity sweep, right? Very nice liquidity. So basically, I think I can enter from here. Even though this is an inside candle, this was a candle, but then this one that caused the sweep. So it's not really an inside candle. So I really can enter here. Stop loss above, right here, above this point. And then what I can target is, this extreme fair value gap here. Okay, it's going nice so far. Okay, going nice. Was this half? No, it wasn't half. Did it hit stop loss? No, not yet. So we're still in the trade. No. So price did hit the stop loss. And I thought it was a nice trade because of the sweep, you see? Very nice sweep. But price eventually went up. It's always better to apply everything that you learned from the SMC or the ICT concepts, everything into this. So apply the thing that I already taught you about liquidity sweeps, but also include and apply midnight open, 8:30 open, agent range, and then try to use fair value gap with a breaker block. It's gonna get your win rate much better. So you can use different stuff, and you see the intermediate term high and term low that I use here. You can also use those. So there are multiple ways to improve this. So I already gave you the main thing, the thing that you really need. Now it's your time to improve and customize this to yourself. At the end of this video, I really advise you to go and look at my channel, pick one strategy and stick with it. Master that strategy, because moving from one to another strategy is gonna get you confused. What you can also do is have multiple accounts. I would say 2, and you can have 2 strategies, master both of them on each account. It's gonna help you a lot. If you guys like this type of content and you want to support me, then subscribe to the channel, share this video to your friends, and hit the like button, comment, so more people reach this type of content, because I always try to make some quality content for you all. Thank you so much. Make sure to join my Discord, and that's it. That was Moham, and I'll see you next video.